Everyday chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Tradin TV. This is your stage to shine.
So hello everyone, good morning and welcome to the London Session Open Analysis Session. It's Monday, September 15th, 2025. So new week, new opportunities. Last week, September 8th to 12th was a roller coaster. Let me quickly tell you what happened. The ECB held rates steady but signaled the potential cuts ahead. So if the economy in Europe weakens, they have room to cut rates to boost the economy. While the US CPI came in as expected at 2.9 year over year, signaling a predictable inflation path, which pushed Fed September cut odds to 100% for 25 basis points. Stocks rallied midweek, where the S&P gained 1.2%, crossing the 6,600 mark for the first time ever. So we have a fresh new all-time high. Nasdaq gained 1.8% on tech rebound, and gold stayed around $3,640 per ounce levels on safe haven buys. Bitcoin gained almost 4% on cut hopes, and DXY closed bearish on dovish vibes. Now, let's talk geopolitics. US-China truce still holds. The deadline, I believe, is in November 10th. It's still November 10th. But soybean boycott drags agricultural exports. China is now importing soybeans from Brazil. So China upped the Brazil buys by 15%. Ukraine talks are still like hanging, nothing new there. Keeping oil choppy at around $63 per barrel. Pearson Hardman is back. You're welcome back. Okay, sentiments bullish on cuts, but cautious. So dovish FOMC Wednesday could ignite risk assets. We are talking crypto and stocks. Hawkish signals might flip to USD strength instead of the weakness and bearishness we've been witnessing for the past month or so. So eyes on the FOMC this Wednesday. Now let's move to the high impact news calendar and check what we have this week. Okay. Now, can you see my screen? Yes, there it is. So today, like, we don't have much going on. We have a holiday in Japan, which is the Respect for the Aged Day. Japan has like interesting holidays. Okay, so yeah, nothing much today. That means thinner JPY trading, potential low volume in Asian session. We're almost done with the Asian session, but that's correct. We didn't see any volumes. Let's move now to the next day, which is Tuesday. Tuesday, we have core retail sales. The previous number was at 0.3%. The expected is at 0.3% as well, so no change. Um, so that's a high impact release because this explains or talks about the US consumer strength. So if that beats expectations, if it comes in more than 0.3%, that would signal spending resilience, which would lift stocks. But a miss in that number could mean higher odds for a rate cut bet. So now we have it at 100% that the Fed will cut rates this Wednesday, so after tomorrow. But some economists are now looking at 50 basis points this year, so 25 basis points cut this year. What else do we have? We have the retail sales. We have core retail sales and we have retail sales. The previous reading was at 0.5%. The forecast is at 0.3%, so a drop. So let's see what happens if it comes weaker or stronger. So this release or this number overall gauges the overall shopping. Okay, so a weaker reading could highlight slowdown, which is dovish for Fed, meaning more rate cut friendly. So that would mean higher chances of more rate cuts. Other than that, what do we have? That's it for Tuesday. Let's see what we have on Wednesday. Wednesday is the big day. Okay, so first of all, we have CPI coming from the UK. The previous reading was 3.8, which is still a bit high. The forecast, the numbers are still not released, the forecast numbers, but if it comes in higher than the forecast that will be released or announced, or higher than the previous, it means that inflation in the UK is still sticky, which delays the Bank of England cuts, which would strengthen the pound against the dollar, and a softer reading would boost equities in the UK. Okay, then we have the CPI coming in from Eurozone. The previous reading was at 2%, the forecast is 2.1%. So if this comes in higher than expected, that would like boost the euro against the dollar. But if it comes in cooler or as expected, that eases ECB pressure, which would weaken the euro slightly. That's in terms of fundamentals. We will go to technicals and discuss that. 1 second, let me see. Pearson Hardman is saying, Safe, I'm taking a risk at buying and my TP at new all-time high and stop loss at 3. What do you think? I think depends on your, I don't know, why did you place your stop loss at 3,600? It is a psychological level. So you have, it was a resistance, now it became support, but that doesn't mean that it will necessarily hold. I wouldn't buy here. I'd wait for a setup. We'll talk more about that when we move to the charts. But for now, let's go back to the calendar. Where did we? Okay, we finished CPI from UK and Euro. Then we have the Bank of Canada interest rate decision. So if they cut rates or don't cut rates. If they cut rates, that's bearish for the Canadian dollar, obviously. If they hold rates, most probably I think they will cut rates because they follow the US almost in every monetary policy move they do. So that would mean higher dollar against the Canadian dollar. But if it stays unchanged or they raise interest rates, which is something I doubt will happen, I believe that the USD against Canadian dollar, CAD, would drop, signaling that CAD is now stronger in comparison to the US dollar. What else do we have? We have the crude oil inventories. The previous reading was at 3.939. last week. This number came out last Wednesday, and it signaled that the crude oil inventories are stacked. So that's why we saw some weakness on oil last week. If it comes in like lower than the previous, it means that there is more demand, which would boost the oil prices. But if it comes in like higher, like we have more in the inventory, it means that supply is high but demand is low, which could mean a weakening to the oil prices. Okay. What else do we have? We have the FOMC economic projections. Yeah, that's an important one. There's something called the dot plot that the Fed announces like every once in a while. So what the dot plot is that they get a chart, and on that chart, every Fed member plots where he thinks the interest rates will be on September, in 2025, 2026, 2027. So you see how the Fed members are looking at interest rates in the near future and the far future. So that's a very important figure, or that's a very important chart to be following or looking at. You can find that at CME Watch, the Fed Watch tool from CME Group. So more cuts projected could rally stocks. So if the Fed members think that there will be, or more cuts are necessary, that means that the USD will weaken, which would rally stocks and crypto. But fewer cuts will signal hawkish tilt. All right. Then we have the FOMC statement, which is like a very high impact. This one we'll observe for the policy tone from the Fed. Dovish language would boost risk, like stocks and crypto. Hawkish would strengthen DXY and yields. All right. Now, and like we have the interest rate decision. The previous was at 4.5. It is expected that they will cut 25 basis points. So the forecast is 4.25%. And most likely the actual will come in at 4.25%. Forward guidance is very important in this one. Like the markets are now pricing in 100% chance that they will cut rates, but that's not what really matters. After this release, I believe nothing will change. But the key will be at the FOMC press conference, because people will be like hunting for hints and clues from Jerome Powell on the future guidance regarding the monetary policy. Okay. Will you take a trade before FOMC? It depends. If I have my setup, why not? But most likely I avoid trading during news. Okay, so what else do we have? The press conference, we just talked about that. Like, you know what? Like, dovish Powell rallies everything. Hawkish Powell hikes DXY and gold. Okay, that's basically what it is. Now let's move to Thursday. Thursday we have the Bank of England interest rate decision. The previous reading was at 4%. Now the forecast numbers are still not out, but remember when we talked that we have the CPI coming in from the UK? If it comes in high, this could signal the Bank of England not to cut rates and to hold the 4% interest rate. But if it comes in way cooler than they expected or the previous, that could mean that they would cut rates by 25 basis points to boost the economy, because now the growth in UK is not at its best, so to speak. What else do we have? We have initial jobless claims. That's the weekly number that we look at. The previous reading was week at 263,000 jobless claims. So a lot of people are claiming that they're jobless, which is very negative for the labor market. If that number comes in lower than the previous or the forecast numbers are still also not released. But if the previous number, if the actual number comes in higher than the previous, that would signal more weakness to the labor market, which would mean maybe more cuts coming in from the Fed in the next meetings. Then we have Philadelphia Fed Manufacturing Index. The previous reading was at minus 0.3%. No, not percent. Minus 0.3. The forecast is 3. So that's a moderate impact. That's not a high impact release. That's a moderate impact release. This one looks at regional factories. If it beats, that would signal a rebound, lifting industrials, but a miss in this reading, which is anything below 3, would add more dovish pressure on the Fed. Okay. Now, what else do we have on Friday? We start the week with Japan and end the week with Japan. So we have the Bank of Japan interest rate decision. The previous interest rates were at 0.5%. The forecast is no change at 0.5%. And I think there will be no change at 0.5%. But if that happens and they if they increase or hike rates, that could mean positivity for the JPY against the USD. So the USD JPY would start dropping. So that's what I would be looking at, especially after changing the Prime Minister of Japan. So let's watch and see. But a hike would strengthen the yen, and if it comes in dovish, it will keep the yen weak. All right. So general notes. We said Japan holiday today means light Asia Open, as we saw. Earnings, we have a quiet earnings week. But the Fed, Bank of England, could dominate the week this week. Thin volume early week, but it starts picking up as we go. So overall, just be careful of the FOMC swings this Wednesday, because dovish data ignites bulls, sticky favors havens like gold, which was up 1.6%, I believe, last week. Now let's move to the charts. Before moving to the charts, does anyone have any questions? Move is London Euro goes wild. If strategy won, then let me read. When is the USD monetary policy? You mean the interest rate decision? It will be on Wednesday. Let me check if you have any questions. Okay, so let's move to the charts, guys, because no questions. Okay. Sure. Okay. It's sharing. Yes, it's sharing. All right. So as always, we start with the DXY to see the overall direction of the market. Again, we have a flat week. It's still ranging, but the range is downsloping, meaning that it's still negative. Last week closed bearish. I'm still waiting for the break of 97 points on dollar index to reach the target of 96, 90, 95.5. All right. So that's for the weekly. Let's see the daily. You're welcome, Zayed. Good to have you. So yeah, on the daily chart, we have it under all moving averages. So it's still bearish, but we closed inside the band. So any close outside the band under 97.45 would signal a start to the drop to this area. But we need to break below 97 points first, okay? What else do we have? The 4 hours is also bearish. We have, yeah, the same. Okay, so now let's move to euro. So yeah, I will tell you about this trade. Just let me start with the analysis. Okay, so last week it closed bullish. It tried breaking down, but it got rejected. I had a buy limit waiting here at 1.1670. And now I'm waiting for it to reach here. My analysis is telling me that it's going up, which confirms the dovishness and bearishness we have on the DXY. Dovishness from the Fed and the bearishness from the DXY chart. Okay. On the daily, it's also above trend line, all moving averages. The Euro USD is still doing fine. I think it's more bullish than bearish. What else do we have? We need to break above this area, which is 1.1790. Let's say 1.18. Once we break above that, I think the rest of the path will be easier. What else do we have? Let's check 4 hours. 4 hours is also bearish. All right. So that's it for euro. Let's check the GBP USD, which is the cable. All right. Also closed very bullish last week. I'm still waiting for it to reach 1.1715, which is 1.17, 3710, not 17, 3710. That's my target. That's my entry, and we're still waiting. By the way, I moved my stop loss under this, so it's now looks like this. There's 15. That's 15. Anyway, something like this. So okay. Now we're still moving up. On the weekly, it's above all moving averages and the trend line. Same on the daily. So everything against the US dollar is gaining strength, which is a confirming sign that the US dollar will keep dropping, at least till the end of this year. Let's now look at the Japanese yen. Yeah, the Japanese yen or the USD JPY is stuck. I've been waiting for it to drop for a while now, only getting charged swaps. Let me check 1 second. So till now, nothing. I'm still at break even. However, last week it dropped quite well. It did not close like low. It closed somehow bearish. The candle is red, but that doesn't mean that this is a bearish sign because I wanted it to close below 146.4 to confirm my movement or drop. What else do we have? Let's look at daily. Yeah, daily also looks so. Yeah, guys, in case you don't know what I'm doing here, I'm inside a trade. This is a classic technical pattern called the bearish flag. So this is the flag here, and this is the flagpole. So the method of measurement that we use to see where the price will go is from the top of the flag, the highest point of the flag. Some people start measuring from the breakout, but no, I like to be safe and measure from the highest point of the flag. So that's why I have my TP at this point. So that's basically it. On the daily, on Friday it closed bearish. That was on Tuesday. Tuesday was the bearish day, but it got rejected and then closed bullish on Friday. That's why I'm not very comfortable with this one yet. Once it breaks and closes below 146, I'll be more comfortable with this with this trade, and I'll move stop losses to above 149.40. But for now, stop loss is still at 151. Okay, let's see. Pearson Hardman is asking me to explain the flag again. Sure. So the bearish flag, my friend, is a technical or a classic technical continuation pattern. So we've been dropping, okay? We've been dropping since June 2024. And then we broke below this. Then we have this flag forming. So it looks like a flag. Do you see the channel here? The previous move before the flag was a flagpole, a sharp movement to the downside. So we call this the flagpole, okay? And this is the flag. So once we finish consolidating and finish accumulating liquidity, price will start dropping to this area. That's how you trade a flag. I hope now it's clear. Okay. What else do we have? Gold. I'm leaving gold for last because it's everyone's favorite. What are the core areas to study in order to become a fundamental trader? Adapt Mind. Hi. It's basically economics. You need to read economics and understand how the economy works. And once you do that, and once you have this knowledge, you can start piecing up the puzzle, as we say. Okay. So becoming a fundamentalist or a fundamental trader. By the way, I'm not a fundamental trader. I'm a technical trader, but I understand fundamentals. Just like to have another perspective or have more layers of confirmation on my trading. That's it. How was the gold trading last week? Pearson Hartman is asking me how was my gold trading last week. I did not trade gold last week. I traded. I took some what's it called, day trades. Like I lost a couple of them, and then I made money on one. So I recovered my losses and ended the week with a small profit. But in terms of swing, I closed my. I took profit on my swing trade that I've been holding for the past a month and a half. So that's it. I'm not trading yet. I don't have any signs, not bullish, not bearish. So I'm waiting for a better opportunity. Okay. Gold seems like bearish. Let's take a look at gold. Okay, so the weekly, it closed very bullish. I don't understand why you see it bearish, but we'll take a look. So guys, before it closes below 3,600 for the week, we can say gold is bearish, okay? Let's move to the daily. Okay, do we have any signs of... no signs of weakness yet. So guys, do you see the horizontal lines here, the horizontal rays that I have on my chart? These are basically the levels, the important levels that might stop gold on the way down if it wants to start correcting. So what I wish will happen, but that's irrelevant, but I'm just sharing. What I wish will happen is gold dropping to 3,450 so that I can buy again and target new all-time highs, but that doesn't necessarily need to happen. It could stop here, it could stop here, and never reach here, at least in the near future. But what I hope will happen is that on Wednesday, Powell will cut rates and then have a hawkish tone, which would strengthen the US dollar and drop gold to this area, or maybe just a resolution in the Ukraine talks, Ukraine-Russian talks. So that would give gold a breather, and we might see it dropping or correcting from this very bullish wave, okay? Now, if we look at Fibonacci, assuming that this is the end of the wave, the 61.8 level is at 3,450. That's why I'm very excited, or I'm hoping it would reach there, because that's an extra confirmation for me. That's a trend line that would be at a moving average and at the Fibonacci golden ratio or golden level, which is 61.8. I would be very comfortable buying here once I see a setup. All right. That's for the daily, because most of you trade gold, so I will move to lower time frames. Yeah, so guys, look what we have here. We had a very bullish uptrend. Now we broke outside, but that doesn't mean it's done. We might be looking at a bullish pennant, which could look something like this. Okay, so we might be still going up, I believe, we'll break the 3,700 level, but that's only conditional of staying above the lows of last week, which is 614, 615. If we get a bullish signal here or setup, I'd be happy to buy, like a very short-term swing or a day trade, maybe. But I believe gold is still going up. We still have one more high to achieve before starting the big correction. So 1, 2, 3, 1, 2, 3, 1, 2, 3. Yeah, I believe this is a, let me see. Bless you. Type. The patterns, yes. All right, so this could be A, this could be B, C, D, and E. So if I get any setups here around this area, around 630, I'd enter with my stops below like just $5 away. That would be a great trade. But just if we get a setup here. So I might be buying around 3,630, targeting minimum 500 pips to the upside. Okay, so that's it for gold. We discussed. Would you like me to analyze anything else? Scalping gold occasionally is better than blackjack. I agree. So, do you guys have any questions or any requests to analyze anything else before I start taking your questions? Okay, that's a good question. How do you analyze correlations between currency pairs? Okay, that's called, what you're saying is that's correlations and intermarket analysis. Now, we know that everything is priced against the US dollar. So if we have a positive US dollar, that means a negative everything else. And if we have a negative US dollar, that means a positive everything else. That's the common rule, okay? That's the rule of thumb, as they say. But then there are some correlations between risk assets and gold and like safe havens, like gold and silver, Swiss franc, the Japanese yen. So in times of uncertainty, people tend to run away from risky assets like crypto or stocks, mainly stocks I'm talking here, because crypto isn't mature enough. Let's take the example on stocks. So people run away from stocks and go to safe havens like gold, silver, Japanese yen, Swiss franc. So if people run to the Swiss franc, you will see that the USD CHF is dropping. Now, let me show you something. What has been happening, or what has been going on with gold for the past, I don't know, like since the beginning of the year? It's been going up, right? Let me show you what happened with the USD CHF. Look, it's also been dropping since the beginning of the year. Why? Because the CHF, or the Swiss franc, is considered to be a safe haven. All right. So when gold went up, also CHF went up. So the pair, which is USD CHF, went down. So when you see this happening, the USD CHF dropping, that means that the CHF is gaining strength against the US dollar. Okay. I hope this answered your question. Gold on 5-minute time frame. No, that's not a trading session, my friend. That's an analysis session. Okay, so people are asking me to do Bitcoin. Let's see Bitcoin. I think Bitcoin is done dropping for now. It got rejected from an important moving average. So I believe we're going to which area? To around 130,000 soon. I believe maybe this week, next week, depending on the tone of the Fed chair, which is Jerome Powell. Yeah, I believe it's almost done. I think it's done dropping, but if not, we might see a drop to like 102, 103,000, something like that, before continuing the climb. But I think it's done dropping. Let's check the monthly. Let me see how it closed. Yeah, we might see a drop because last month it closed bearish. So we might be heading towards the 100,000, 103,000 per Bitcoin. 1 hour, let's see. What is it doing? On the 1 hour, it's still bullish, to be honest. But I'd be careful trading Bitcoin because it could reverse and go back to below the last week's low, which is 107. So let's wait and see. What else do we have? come on Discord. We all, and especially me, would love to have conversation with you. I might do that, yes. Why not? So Red Wing, did I answer your question about correlations? Yeah? All right. Any more questions? I'm gonna wait for 2 more minutes or 3 more minutes. If we don't have any questions, then I did a great job, and I can leave you to trade and enjoy your trading week. All right. Questions. Okay, so we might be looking at a buy soon here. Thank you. You're welcome. Ethereum, 30 minutes. Okay, I'll do Ethereum and leave. Let's see. Start with the monthly. Okay, so unlike Bitcoin, Ethereum closed the last month bullish and closed above this resistance zone or supply zone. Then we have the weekly. Last week was bullish. Now, I think Ethereum is more promising than Bitcoin in the short term. I'm talking like a month from now. It's still very bullish. Now, we're standing at a very important zone. We need to break above 5,000. Once we do that, I believe that it will keep going up and up. The first target is at 5,750. Let's see how that works out, but it's very bullish. It closed above all moving averages, and it's outside the upper band, so we might be looking at a new impulsive move to the upside. All right. Thank you for watching. Elliott wave analysis. Well, I'll do it just for the fun of it, but you shouldn't be trading using Elliott waves, okay? So let's start with this. That's basically my Elliott wave analysis for gold. So that's wave 1, wave 2, wave 3, and wave 4, and we're in the big wave 5. So wave 5 has 5 waves. We had 1, 2, and obviously we're in wave 3 now, which is the most impulsive and the strongest and fastest wave. So we had 1, 2, and now we have 3. 4 could drop to around $3,075. So 3075. That's wave 4, and then we'll head to above 4,000, I believe, maybe even 5,000 in the coming year or two. But we will have, according to Elliott wave, we should have a sharp correction to the downside, but never trade based on Elliott. You just check Elliott to see if you're in an impulsive or a corrective wave. That's it. That's what you use Elliott for. All right, so that's it for today, guys. I hope this was useful, this was helpful and fun. As always, trade responsibly, and I hope to see you in the next one. Take care and trade responsibly. Bye-bye.